Hello and welcome to today's video, which is going to be very rich, and it's called Face Ripper. Face Ripper where? In equities, precious metals, or in oil? I guess the answer is clear if you had been following what I had been putting out ever since the positioning became apparent before CPI pre-market, and I hope you had been subscribed and took advantage immediately once the video and the premium mailings went out to clients together with updates on the Telegram premium channel for equities. You know pretty well what I'm doing on Telegram and on my site, and you know my rich Twitter feed. Thank you for liking and subscribing to these analyses over YouTube, because that's providing an extra edge for you. So let's start with how yields have topped ever since CPI came about and what it meant for equities, for the competition that they had been facing from risk-free return on treasuries. That's been coincidentally as well a time when cryptos took off, and we had seen quite a nice move ever since in precious metals as well. What about Friday? Let's digress and dive into precious metals and oil for a while. Oil had been consolidating above 77, above my target, and we know about increased domestic drilling and exploration that is going to come as of next week. Which way politically it's going to come? Executive orders, Congress, remains to be seen, but energy stocks had been at the forefront of the turn in equities for quite a while already, and we had seen a temporary local top in yields being made below 5%. Will 5% on 10-year be overcome? Definitely it will. First quarter, second quarter, I'm not giving it too much time to be overcome, because there are quite a few reasons for that fundamentally and macroeconomically, and I'm explaining them in the article which I will publish tomorrow. So have a look and read the opening part, which will be extra long. For now, what matters is that yields on the long end have paused and leveled off. Friday we got somewhat better housing data, and on Thursday there was the mix of somewhat hotter manufacturing data together with underwhelming retail sales and underwhelming unemployment claims. That somewhat brought closer the prospect of rate cuts. However, Friday was another day and another set of data which showed increased activity in housing actual starts, and that had an effect as well, and that's why you see the yields on the short end to tick up that much as they did on Friday. US dollar is presenting the best kind of an uptrend, and it's slowly marching towards my 112, 113 technical target, because you have to compare this against the Eurozone, and UK are in economic difficulties, to put it politely. China is struggling with deflation or significant slowdown in growth scare that feels like deflation. And Japan, the talk about rising yields is strengthening, and it remains to be seen how soon that is going to be translated into action. Will we see some more moves, at least verbally, next week, or would Japan wait somewhat longer? These are as well the factors. However, the ascent in US dollar is very clear, and it's based on the macroeconomic differentials versus the rest of the world, which you will see me covering and read it tomorrow in the extensive weekend article. Next chart, remember the 4-hour one which I had presented in Friday's video, and the preceding, keeping the pulse on how equity markets are doing, whether they will break above the declining trend line connecting recent tops on S&P 500 or not. You remember, and I will be linking to these videos throughout this one as it's being played out, and as well at the very end, you remember that I disregarded the poor breath message of Thursday's session coupled with strong selling into the close. I was not spooked by tech weakness, semis weakness, consumer discretionaries or communications, which had all been Thursday's underperformers. And look where they had been on Friday, and how well financials had been doing on Friday. I especially like industrials joining in the party. It was a strong risk-on day, and this daily doji is doing a little bit of a misrepresentation of how good Friday actually was for the markets, for risk-taking, and of course for intraday clients and swing trading clients, which had been advised of the great sensibility of being long, because we had seen a great shift, macroeconomic shift, and the decreased competition from bonds for equities, which is the concept I had been talking for weeks, the equity risk premium one. And we are now in an unconfirmed breakout above that declining trend line. Remains to be seen whether we will get a little bit of a retest, some sideways consolidation Tuesday, or whether we straight away rip higher, because you can count on the new admin hitting the ground running. So these are my expectations, and why I disregard the advanced decline line being kind of just flat. I pay more attention to the advanced decline volume rising and slowly market breadth broadening, not just through the perspective of new highs, new lows, which is the indicator at the very bottom. I'm explaining these in the premium sections for trading signals clients and for for stock signals clients, and within the intraday channel I'm just calling the market turns, explaining the incoming data and what kind of very short-term intraday positioning it necessitates. You may remember when I had been on Twitter talking about individual stocks and how volatility had been rising, and within the replies, I'm sure that you are going through my replies as well. I had talked the average true range, how much it had risen, not just on those Max 7 stocks, many of which had been in a long consolidating pattern, and it's smacking off an upside breakout there, which is a question of time. And as I had been saying on Thursday, that an upside breakout of this declining trend line is approaching, and we might get it within hours, or maybe the next day. We got it somewhat later the next day indeed. This not annotated chart is bringing you what I had been highlighting and praising so much about this S&P 500 upswing, and that was financials leading. Financials leading. Tech is not completely lost, but it's not the leading sector for understandable reasons. Headline sensitive, but Friday we got the Trump-China call, and it was very well received and helped China exposed stocks from Tesla to semiconductors, and as well we had seen nice movements in TSM too. Industrials rising are little paid attention to, yet very important confirmation sign of broadening breadth where it matters to me. Strictly within this presentation or preceding ones, you had heard me speaking about this is what is happening and why I pay attention to it, why I heed that message, or why I disregard the message. It's very important to always put together the final picture so as to improve the odds, because this is just putting pieces of the puzzle together. That's why there I have the join page, which is helping you select what's right for you, together with my one-on-one support delivered fastest to you over Telegram. Forget not about the great crypto successes that Elena had been keeping track of and talking about frequently within our intraday channel for stocks. I had already spoken about consolidation in oil, that this is not going to be a phase ripper in oil prices. And as for precious metals, what's not to like about a slow, steady grind higher, which is showing some kind of a nice resilience against versus leveling off, somewhat rising, especially on the short end, yields. So that's the full scope of what I do, and I would like to ask you, just tell me in the comments which individual stock charts you would like to hear me covered next. Because I want to create more of the content that is relevant for you, instead of serving you habitual Max 7 stocks. Let's dive into the niches that I'm as well following up on, but frankly have no time to cover on more than one-on-one basis. So share your requests and let's get into them in one of the following videos. You pretty well know my journey. It's been a very rich one. Oh, what a great 5 years I had been through, really. Obligatory disclaimer, and have a great weekend.